What's up, everybody? In this video, we're going to be going over the markets. We're going to be looking at the QQQ. We're going to be looking at the SPY. We're going to be looking at the IWM. We're going to be looking at where I think they're going to be going over the next week or two, short-term outlooks on the markets, the market trends, and my personal insights. So let's get into it. So the QQQ here, well, actually, first we got to start off by talking about the Fed rate decision. The Fed rate decision is going to come on February 17th and February 18th. So February 17th, they will announce whether or not they are going to cut rates by 0.25 or 25 basis points, 0.25%. I truly believe that they are going to cut rates by another 25 basis points. But the market has been looking at it, and the odds are kind of 50-50 on whether they do or whether they don't. 60-40 or 50-50 last time I checked. So I believe, getting into the charts now, I believe this next week or 2 weeks leading up to the Fed rate decision are going to be a little wonky. I think we're going to have some consolidation and a little bit of a pullback. Not a major pullback, not 3 to 5% plus, in my opinion. I believe it's going to be anywhere from 1 to 3% pullback in the QQQ, SPY, and IWM. So let's look at the charts. So as we see, we had this ascending triangle here. We had this breakout. We had this big pullback back into the ascending triangle, a little bit of a fake out here, a little bit of a cup, and then a push higher, right? So once we had this breakout, we came back down. And as you see, we retested right here. And then we had a push higher. So we've been predicting week by week what's been happening, the bounces, the tops, the pullbacks. We've been pretty consistent at being able to do this, all thanks to our Williams R percentage and our Williams consolidation box that I personally use and believe I named to figure out where we were going, right? So coming up to this red line, that's kind of your barrier. It's where typically you're going to bounce off, right? And then whenever you break up here, come back down, you make this support, as I call it. So you don't have a Williams consolidation box until you come up and then pull back, make your support, and then you kind of go back and forth like a crazy person in a room, sideways within this Williams consolidation box as you continue higher on the price and candles and overall stock or markets. So with all that being said, we are coming very close to the barrier. We're kind of curling off the barrier right now. And like I said, I think one or two things are going to happen. We're going to get a little bit of a push higher tomorrow or beginning of next week and come up to the barrier. Or we could front run the barrier and get a little bit of a pull and get this pullback down to here, down to support or the bottom of the box, consolidation box now. Really just depends. I'm no oracle. I don't know exactly what's going to happen, what news is going to come out, anything like that, right? I just can look at the charts and kind of determine, take all the probabilities and everything I see on the charts and try to make the best prediction possible based on the probabilities. And the more probabilities that we have going in our favor, either up or down, kind of tell us make our prediction more accurate over time. Not always going to be 100%, but win more than we lose, right? Just like in trading and being a profitable trader, that's key to win more than you lose. And that's one facet of being a profitable trader, obviously. So I believe, like I said, either a little bit more of a push up or we could front run it and start this consolidation sideways here. I believe our levels, if we come down to the daily chart to kind of get a look under the hood of the weekly chart, we can see here that we have a uptrend on the Williams R, and if we do get a pullback, most likely it's going to be in this area to this uptrend on the Williams R. So a pullback to here on the Williams R. So that would lead to a pullback. Honestly, perfect area to fill this price gap right here. And that would bring us down to about 517-ish dollars per share on the QQQ. Our second target and level to hold, if that doesn't hold, would be a level about around 514 ish. And that's going to be our 9 EMA right here. Also, where we broke out over and coming back. So I always say this, when you have a rejection, that is resistance. And when you have that resistance, the only way to turn that resistance into support is by breaking out over it, coming back to it, retesting it, confirming, pushing higher, and then you have now not resistance, you now have support. I hope that makes sense. So to turn resistance into support, you need to first have resistance, break resistance, come back to the resistance, come back to the scene of the crime, retest it, confirm it, and now you have support. So that is how that works, right? So same thing here. Resistance, resistance, resistance again, honestly. So we broke out, came back through. We're bouncing in here, then broke out. And then what happened? Right? What happened? Right here. We bounced and continued higher. So to show it, boop, 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 and then go, right? So now this resistance now what was resistance is now support. So yeah, so 517-ish or 514-ish, you can see that's only that's still less than a 2% pullback. I think we get that. We get some consolidation. Like I said, we could move a little bit higher. And if we do that, then that now becomes a 2 to 3% pullback. If we push up a little higher tomorrow or so. But yeah, I mean, we could end the week strong. We could have a strong beginning of next week. But then I do believe within before the Fed's decision, I do believe you're going to start hearing some fear, uncertainty, doubt, FUD about the rate decision, about how, oh my God, what if he doesn't cut, blah blah blah. But the thing you need to know is you don't fight the Fed, and I truly believe that he's going to cut 0.25% or 25 basis points. As once the Fed gets going, once the Fed gets cutting, then they typically continue to cut and they don't have pauses typically. They're going to continue to cut at a slow and steady pace, and unless there is some economic issues that arise, and then they'll start cutting at a more defined pace, right? So that's QQQ. Those are the levels: 517-ish, 514-ish, no more than about a 2% pullback. If we go up a bit, no more than about a 3% pullback. I am very long and bullish in my portfolio, in my trading and investing portfolio. So I did this hedge right here in my trading portfolio. It's about a $3,600 hedge. I like to do around a 1% hedge typically in my portfolio. So that's where I'm at right now with this hedge. Just around, well, I don't even know if it's a percent. I just honestly picked this options and went with it. So I didn't want to go too heavy on it because I don't think it's going to be a big pullback. I am going to look for this pullback back down to 517, trim a bit, and then down to 514, trim a little bit more. It's honestly a little bit of insurance for my portfolio. If we do get that pullback under 3%, these will print pretty well, and then I can go ahead and take some gains on that and then redeploy that on the names that have pulled back. And that's kind of how you hedge in your investing or trading portfolio. So that's what I'm doing, just so I have some insurance against a pullback like I believe that is coming before the Fed meeting. When you've been in the market long enough, you kind of know how Wall Street's going to play these things. Um, I can I'm not going to guarantee it, but I can almost guarantee that they're going to start talking and spinning it up on CNBC and all the FUD around, oh my God, is he going to cut? Are they not going to cut? Who knows? Oh my gosh, if they don't cut, then it's going to crash the market, blah, 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 FUD, 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 fear, uncertainty, doubt. So that's what I'm thinking. And then it kind of aligns with what the chart is telling us, right? What the high five setup is telling us. We're still green. We're still bullish. There's no reason to sell all out of your portfolio. That's not what I'm saying. I'm just saying I'd like to let you all know to be prepared for said pullbacks, even if it's less than 3%. Still want you all to be prepared. That way, when it happens, it's not like, oh my God, the world is ending, blah, blah, blah. Right? That's not the case. It's a small little 3% pullback before we push higher. I still have profit targets of 560 and 580 on the QQQ before March 2025, April 2025 basically. So, I think this bull run is still going to go, but we have to have pullbacks along the way. Just like we saw here, we had this almost 4% pullback, and we were calling that out and where the levels were on that a couple weeks ago. So, the SPY, we'll brush through the SPY and the IWM. Same thing here, about a 1.46% pullback. I think we pull back to about where we broke out. So this was once, like I keep saying, this was once resistance. We broke out. Now we're going to pull back. And what was once resistance is now going to turn into support once we retest and continue higher. Again, no more than a 2% pullback here. If we do break lower and overshoot it, I believe so that would be about $600 flat ish. And then our second level would be about 594 to 595 ish on the pullback area. So we could overshoot and then come back down here and then continue higher. I only played the QQQ on some puts. I did not play the SPY or IWM on any puts. When I do puts or calls, I usually do the QQQ just because it moves a lot more. So I rather play it like that. And then these other targets were honestly from a couple weeks ago when we had this big pullback and we were saying, okay, first target, second target, third target, and we got to our second target about 585-ish. We got to 584-ish on the pullback before we bounced higher. So like I said, these pullbacks, these targets, they work really well. You can see up here, we come up and touch the top. We move sideways. As we move sideways, we kind of go up a little bit, and then we eventually bounce and pull back. We pull back. We bounce. We bounce. We pull back. We pull back. We bounce. We bounce. You see why the Williams consolidation box is so powerful, right? When you need to worry is whenever you break this support right here and you break down here. When you break that support, subsequently with the high five indicator turning red, that is when it is time to worry. Okay, that's when it's time to we might be topped out in the market, or get a significant 5, 10, 15% pullback. Okay. So that's what I'm looking at the SPY. Lastly, the IWM or the Russell 2000. Very, very nice pullback here. You see top pullback, right? Top pullback, bottom. We go up, top pullback, bottom. We go up, bottom. We go up. And then now top here, and we are getting a pullback. I don't know if we'll come all the way down here to retest support, since we are already, let me get rid of all this, since we are already kind of here at the level that I'm looking at. The level I'm looking at is about 238-ish, and that's exactly where we are right now on this level. And I'm looking at this level because why? Again, what once was resistance now comes back to be retested and turned into support before we bounce higher. And I'll also say this, if you look at all these charts, this week QQQ is up massively, right? QQQ was up over 2%. SPY was up over almost 1%, and 1% the last week. QQQ was up about 3% the last 2 weeks. But look at the IWM. The IWM kind of front ran the QQQ and the SPY, because it was up 1.3% last week, but now down 1.57% this week. So basically down 0.27 at this point this week. So it's kind of front running what the QQQ and IW or QQQ and SPY are doing. So right here, what once was resistance now turning into support might be the bounce area, and we could definitely see a pullback in the QQQ and the SPY, while the IWM and the small caps are bouncing and front running, just because there's such small market caps, and it doesn't take a lot of money to get those things moving. So that's what I'm seeing, guys. Second pullback area would kind of be in the middle of these candles right here. So we're probably looking at about 234-ish pullback here. If it got decently bad, right? We're talking about a almost 3%, almost 5%, or if it comes all the way down to the 9 EMA, we're looking at about a little over 5 to 6% pullback. But that's not the same as a QQQ and SPY. The IWM is much more volatile, as you see, almost 9% move, and then a 4% move, and then almost 5% move, and then now could be a 4%. So we had a 4%, so we might get this might be it. We had a almost 9% move, had a 4% pullback, so almost half. We had a 4, 5, almost 6% move, and now we could have a 3% pullback, which puts us right around this area. Like I said, IWM might front run what we're seeing. And, we're already getting a decent sized pullback, and we might not pull back all the way down to support. We might just stop right here. So that's what I'm seeing. This one as well, cup and handle breakout. We have a measured move at the 306 before 2027. And we have this ascending triangle pattern right here with a measured move to about 259 before February. So like I said, all three markets, I believe we're going to continue to go higher. I just think we're going to get a little bit of a pullback and some FUD being spread by the news before the Fed decision. And then I fully expect the Fed to come out and cut rates by 25 basis points, leading us to our Santa Claus rally. Thanks for sticking around, guys. Let me know your thoughts in the comments. I really appreciate all the love and support. I'm happy to be back. I'm happy the family's getting healthy again. And I look forward to our continued growth and community, and to continue to help you guys out any way I can. So appreciate all of you. Hope you have a great rest of your day, and I'll see you tomorrow.